Buddy, this is Ospreyeye from mychartcoach.com, and we are looking at ticker symbol XLY. This is the consumer discretionary spider. So if you look here, it has been forming candles in the bullish upper Bollinger Band channel. As you can see, this very nice uptrend. Once middle Bollinger Band resistance broke the first week of October, the candles have been riding this EMA's 4 and 8 support higher. Now on Friday, a bearish pattern did develop, bearish deliberation block. So what happened was you had this green candle here on Wednesday of last week, followed by another green candle where the open was lower than the close of the previous day. And then the following day on Friday, there was this with a higher close. So you got these two green candles in a row, and then the third day you have a gap up open and a doji formed. This inverted doji. Our saying is dojis at tops of runs equal danger. So this inverted doji is a caution candle, and this is a very strong uptrend, but a red candle would confirm the pattern. EMA 4 at 80.58 is the first support level, and then EMA 8 at 80.02 is the second. As you can see, EMA 8 has held during this run up. So if that support level breaks and the green ascending support line, that would put the middle Bollinger Band here at 78.55 on deck. As long as this middle Bollinger Band support level holds, the uptrend should continue. If you look up here at Fasto, there's a bear cross. See the green line cross the red line to the downside on Friday. Okay, and Fasto has been in the above 80 overbought power zone during this big run higher. And then here you have RSI. Up here, the relative strength indicator is now hitting 70. It's at 69.09. 70 and above is the overbought power zone, and that is the highest level for RSI on this chart. You'd have to go off this chart to find a higher level. Look down here at volume, and you have very good volume. There's this big spike here on the Wednesday of last week. See this big spike? That was the start of this run. Very solid volume. And then you had a MACD bull cross here the first week of October, and that signaled the start. That lined up here with this close above the middle Bollinger Band. So if you look at the bullish setup here, the first week of October, you had a MACD bull cross. You had the EMA 4 bullish crossed EMA 8, and they both moved above the middle Bollinger Band, and you had this close above the middle Bollinger Band, and that was the signal, the start of this uptrend. And consumer discretionary has been the big winner the whole month of October. I mean, look at that huge move. Okay, let's look at the next chart. This is another daily chart. This shows the 50, the 100, and 200-day moving averages. As you can see, candles are forming above all three levels. In my opinion, a rising wedge pattern has formed here. As you can see, the candles are coming to this tight trading range here. So if this green ascending support line breaks, that will equal downside risk. What you'd like to see hold is this high from back here in July and August, in this 80 this $80 range here. That was also the breakout level earlier when the share price broke higher. That should be solid support on a pullback. So look at 80 as a key support level to hold. If that breaks, then you'd see here that there was this big run to the above the 70s here. So you would look down here at 79, which was the high of the first week of August. So that would be the next support level from below 80. Look at the next chart here, and this is a 15-minute chart. Each candle on this chart represents 15 minutes of trading. So this is a 4-day chart, and as you can see, the XLY has been in this nice uptrend. The candles are forming above the 50, the 100, and 200-day moving averages. What bulls want to see is they want to see this green ascending support line and 50-day moving average currently at 80, 84 hold. If that level breaks, that's going to put the 100-day moving average at 80.41 on deck. If you look up here at Fasto, you will see that Fasto is at extreme oversold levels down here at 1.84. You'd have to go out off this chart to find a lower level. So this is a close at extreme levels. And then you have RSI, which is below the 50 to 70 bull zone. As you can see, it had been above that level, going back here to the all the way back to the 28th with this spike up. So now it's below 50. Bulls want to see RSI back above the 50 level. If you go down here and look at this volume spike, there was a huge volume spike into the close. So that was right off this key support level. So that's something to keep in mind. There was the last time there was a big volume spike like that, after a big drop right here that preceded this run. So yeah, this could be after all these red candles, bounce players loading, or yeah, or it could have been more people exiting after this big drop. So yeah, we'll have to see on Monday. MACD had a bear cross here, so that correlates with these red candles forming. So bulls want to see MACD level out and cross back up to the above the signal line. And then if you look here, here's another 15-minute chart, and this shows EMA's 4, 8, and the Bollinger Bands. And this is, I think this is important here. The candles were riding above the middle Bollinger Band, very strong uptrend, and then into 3 o'clock here, 2:45. There was a candle closed below the middle Bollinger Band, and then as you could see into the close, candles were forming below the middle Bollinger Band and below EMA's 4 and 8. So if those levels remain resistance, that will signal the start of a new downtrend. So yeah, you could see EMA 4 bearish crossed EMA 8 here. That signaled the start of this little downtrend here. So yeah, so going forward, candles forming above the middle Bollinger Band on the 15-minute chart here, currently at 81.19, equals upside potential. Failed to break the middle Bollinger Band, and that equals downside risk. Bulls want to see this 81 level hold here, this 80, 88, 90, 80, 90 range. That if that breaks, you might see a drop down here to this 80-60 level. So yeah, this is XLY, which has been very, very strong, and yeah, as the chart shows here, this is a very strong uptrend, but a bearish pattern did form on the daily chart on Friday. So look here at this is the definition of the pattern, and confirmation level is defined as the midpoint of the last close. So yeah, if you see a break below that level, that will confirm this pattern. So thank you very much for viewing this chart, and I hope that you had a great Halloween weekend, and please view more of our charts in the future. Thank you.